Hello everyone and welcome to another video. This is Accounting Tax SOS, where we cover everything accounting and tax. My name is Christopher Cox, and in this video we are covering a tax topic, that is netting capital gains and losses with long-term capital gains and short-term capital losses. So let's go ahead and get into it. Okay guys, here we are at our scenario for this example. We have here Franco is in the 25% tax bracket and has sold the following stocks in 2017. So what we're going to do is we are going to find the net short-term capital gains or loss. We are going to find the net long-term capital gain or loss, and then finally we are going to find the overall net gain or loss from all these transactions. So let's go ahead and get started with the first question here. What is Franco's net short-term capital gain or loss from these transactions? The first thing we're going to do is label each of these stocks, A, B, C, D, or E, either short-term or long-term capital gains. So we will start here with stock A. It said it was purchased in 1993 and sold in 2017, so that would be a long-term transaction. And for those who don't know what's going on with this long-term and short-term, long-term means that it was held for over a year. Short-term is a year or less. Okay, so moving on to stock B. We have here, it says date purchase was for 10/17, and the date sold was in the same year, so we will characterize that as a short term. Okay. Stock C, purchased in 2015, sold in 17, so it is a long. Stock D, this one was purchased in 07 and sold in 17, so long as well. And then stock E, bought in 17, sold in 17, so we have a short. Okay. The next step, we are going to kind of do this thing all in one kind of way here. We have all of our listed short terms and long terms, so we're going to have long term over here, and we're going to have short term over here. Okay. And we're just going to go ahead and separate these, which makes it easier, and that's the way I do it. You can do it however you like, but this is the most effective for me. So A is a long term, so I'm going to write basis here, basis B, this. That is 7,250. And then we have our realized amount. I'm going to try to write these as small as I can because I do not have much room here. So the realized amount was $4,500. And to clarify for some of you out there who might not know what these mean, the basis is the amount that he originally paid for this purchase in 1993, and whenever he sold it in 2017, this is the amount that he sold it for, so $4,500. Okay, so and we have stock C is the next one. Basis of stock C, $10,750. With realize, Sorry for my handwriting, guys. Not the best. Realized for $15,300. Okay, and then I'm going to erase this because I'm going to have to use this space over here. D, so we have here D, and D has a basis of $5,230. $5,230 and realize of $12,400. And lastly, we have, oh, that is the last one. Okay, so moving on to short term, we have stock B at a basis of stock B, basis of $14,000. And then realize of 14,000, we have a realized of $17,500. And then we have stock E, and that is a basis of $7,000, $7,300, $7,300, and then a realized, realized of $3,500. Okay, so now we have all of our stocks here. We have A, B, C, D, and E. That accounts for all of our stocks, and we have all their bases and the realized amount when they're sold. So we can go ahead and find the gain or loss on each of the stocks individually. So we're going to go back to long term, and we are going to calculate the gain or loss for stock A. Okay, so for stock A, $7,250 basis with a $4,500 realization. We can go ahead and net that, which is negative $2,750. So this individual sold this stock for less than he bought it, which is a difference of $2,750. So that is a loss on that stock. So moving on to D, what we have here is a basis of $10,750 and a realize of $15,300. Whenever you net those, you get $4,550. Sorry. $4,550, and that is a gain. Okay, so basis is less than the amount you realized, so you will notice a gain there. So for stock D, we have a basis of $5,250 and then a realize of $12,400. When you net those, you'll get $7,170. Okay, and that is a gain. So a little plus for that one. So what you'll do is first you'll take all of your long-term and you'll go ahead and net those. You'll net those separately from your short-term capital gain or loss. What you'll do is you will have 7,170, 7,170, 4,550, and then you'll have your 2,750, 2,750, and that is a negative amount indicating a loss. So whenever you net those, you will get $8,970, 8,970, $8,970, and that is your capital gain from your long-term investments. And that is separate from right now, that is separate from your short-term. So let's go ahead and calculate that real quick. So here for your stock B, short-term basis of $14,000, realization of $7,500, $17,500, the difference of $3,500. And that is a gain because your basis is less than your realized amount. Okay, moving on to E. So when you net transaction E, the basis is higher than the realized, so you will have a loss of $3,800. $800. Okay, and then you'll go ahead and net these two, 3,500 with a loss of 3,800. In this case, your loss is greater than your gain, so you'll have a negative 300 loss. Okay, so what we're going to do now is we are going to net our long-term and our short-term. So we're going to move up here and take 8,970. Subtract your $300 of losses. And then you'll have a net gain of $8,670. $8,670. Okay. And up here, so question 1, what is Franco's net short-term capital gain or loss from these transactions? So what is the net short-term capital gain or loss? So we go over here to our short-term. This is our gain, this is our loss. Over here, this is our net. So the answer to number 1 is $300 short-term capital loss. Moving on, we had this one correct. We're moving on to the second one. What is Franco's net long-term gain or loss from these transactions? So we go over here to our long-term. These are all of our individual nets. So we went ahead and netted that to get our net long-term capital gain, which is 8,970. 8,970, and that is a gain. Okay, and that's good. And then what is Franco's overall net gain or loss from these transactions? So that is when we took this one here, our long-term capital gain, and then we took our short-term capital loss. We netted those up here, and then we got $8,670. $8,670. Okay, so these are all of your answers right here. I think that was pretty. I think that was pretty short and effective. Pretty simple stuff. You guys might be wondering why it says up here he's in the 25% bracket. That only really matters with whenever you're trying to figure out what rate each of these are taxed at. So if he's in the 25% bracket and he has a short-term capital gains, that is going to be at ordinary income tax rate. But if you have a long-term capital gain, that is going to be taxed at your preferential rates. They're not taxed at the rate that you're being taxed for your income. They're taxed at a little bit of a different rate, more lenient rate. But that doesn't really affect this problem at all, because it doesn't ask for at what rate they'll be taxed at. So hopefully you guys enjoyed this video. Hopefully it was helpful for you guys. Some of you might already know how to do this, and that's okay. This is a good refresher. But if you guys have any questions about any of the stuff that I covered in this video, and want me to maybe go into more depth about this topic, I'd be happy to do that. Just leave a comment or send me a message telling me what you want me to do, and I'll go ahead and do that. So thank you guys so much for watching, and I'll catch you in my next video.